one thing that we all have to kind of really reconcile to is that there will be an offline model to an online model. You will not, it will be very difficult to do away with the credit and risk process in a lending business, where you would want to visit the customer at least once. I tried that. I actually subscribed to an online marketplace, and they said, I told them, you say 25 lakhs rupees sanctioned. He said, no, don't worry. One person will visit you tomorrow to office to check whether you have an office. So it will be a myth if people come to investors like Rajesh and say, we do end-to-end online. It's 100% technology, 100% online. It will never happen. The credit and risk has to be offline to a large extent, and I think this is how it will move.
Thank you. I'll come back to you, Srirang, on that later. So before I come to you, Harshal, let me get Sunil to talk about what kind of changes is happening in one of these industries, which has been the one that's sort of almost resistant to change, but is seeing so much rapid change across the board, right? You've gone from brick and mortar to ATMs to completely virtual banks, internet-only banks, mobile-only banks, and all of that happening. What's next? I mean, India actually now has a mobile-only bank, which is the DigiBank, and there are others that are sort of planning it. But talk about that, because then I can sort of then get Harshal to talk about the regulatory challenges that all of this has, and the ones that the regulators in India need to essentially address.
Yeah. Thanks, Vinod. I think one thing which we should also look at is, while we talk about FinTech, it's also true that financial services players who've been around for a period of time are also evolving. I mean, they also they also deal with the same customers. They realize the fact that today, for example, people don't come to branches of banks. The footfalls in branches of urban centers for private sector banks are down 90% in the last 10 years. Huge changes which are happening. I mean, we all know the reasons for that, so we don't need to get into that. So banks themselves have to change. NBFCs need to change the way they're doing the business. Now, what holds them back, or what's the reason that I think a separate class of players called FinTech is evolving? Having been in sort of, I would say, two relatively small banks, Yes Bank and then RBL, in the last 10 years, let me sort of share my perspective and the thought process which we went through in the last 10 years in some of these banks. Couple of things which sort of come in the way. One is, of course, the fact that you've got embedded practices. You have people who've been doing the same stuff year in and year out, and what's worked well for them in the past. And therefore, to get a whole set of people to change mindsets and say we're going to do things differently is not easy. So how are banks trying to solve that problem? I think a lot of banks are getting into this thing about two things they're saying. A, let's have separate teams for BAU and for innovation. Very clearly, banks are starting to invest, not starting to, but have invested fairly large amounts into innovative teams within the bank. Second is they're saying, let's partner with FinTech players. Let's get FinTech players to integrate with us from the business side, which is where open architecture, APIs, etc. come in. Secondly, take investments in them so that you get to see what is happening there, and some of that culture infiltrates there. And third thing which banks are realizing is that end of the day, the one thing which FinTech players don't understand and probably don't need to understand is how exactly does the architecture of a regulated player play out. So why should a bank not start providing what is called banking as a service? Going to FinTech players and saying, hey, hook on. Whatever architecture is available, you don't need to do everything yourself. We'll do 80% of the donkey work for you. You guys do the innovative stuff. So I think that's starting to happen. What are they calling banking as a service, or banking in a box, etc., where banking becomes a service by itself to a FinTech player.
What I experienced in the last 30 years, everybody is doing the banking as a favor.
Yeah.
They don't reach out to you.
Correct.
As an entrepreneur, it's a big bloody favor they're trying to do to you.
Yeah.
It would be a big change if banks came to us and They said, hey, you make a lot of money, let me help you.
Right. And the fourth thing which I think we should also talk about is when a bank thinks about investing in, let's say, a FinTech, what does he think about? What's going to happen? Moment he starts doing that, he's going to have losses. What is the investment community going to tell the bank? They're going to say, look, buddy, end of the day, I'm going to value you on price to book. We're going to value you on earnings. Yeah, you are investing, $200 million to create new technology. How do I value you for that? It's much easier for a fintech company to spend $200 million and get valued in a very different manner than for a mainline bank to start doing that. So these honestly are the challenges which face financial services players when they're embedded, in order to, that they're sort of forced to look outside and forced to sort of look at fintech players as a complementary entity to themselves rather than sort of a competitor who will disrupt them.
So, Sunil, a comment on that. So, does it necessarily mean to say that banks have to be sort of drag kicking to change, in the sense, I mean, they're not necessarily going to be open to change, or is it that?
No, I think banks are open to the change. I think the challenge is one of executing that change. It's like trying to refuel an aircraft while it's flying. It's not easy to do that. You've got all the challenges which you face that. So I think banks, mainline industries globally understand that issue and are therefore looking at the ecosystem to help them to make that change. But a lot of them are making that change and will make that change.
So let me give you an example.
No, let me finish with Harshal, and then I'll come back. Harshal, I mean, we are in an industry which unfortunately has a lot of regulatory oversight, and in a country like India, that's all the more. Do you think any of this is going to change? Because the biggest challenge that fintech companies have is in being able to play within these regulations, and a lot of these are opaque. Some of these are, fairly old. Some of these don't necessarily mean much in a current day where changes are happening and changes are so rapid.
And some of the law is written in Greek and Latin.
Yes, absolutely.
Yeah, and to Sunil's point, I mean, an elephant is an elephant and a horse is a horse. So, it will take a lot of time for the elephants to get the agility of the horse. But, the regulatory perspective, in general and then in India, okay, many of you would have seen Simon Sinek's video on the law of diffusion of innovation, right? So if you break people, innovators, early adopters, late adopters, and laggards. Laggards are the guys who would touch a mobile today, okay, in 10 years, okay? The regulator, okay, is always, okay, and we are in, depends on what we are looking at, we are in any of the categories there, but the regulator always is in the category of laggards. Okay, and I had an honest conversation with a couple of very senior regulators saying, why are you always at the laggard stage, right? Why are you always late? Like the police in the old Hindi movies, saying coming in after all the action has happened. He smiled and said, that is for a reason. Okay, we don't want people at large to blame us, for an RBI approved or a SEBI approved guy cheating public out of, tons and tons of money, right? So that's a smart way, but that's the way regulators are. And that's going to be, that has been since time immemorial, and that will be the way it is. Coming to the present situation in India, and again, honest conversations with people at SEBI, RBI and IRDA, okay? They are saying we are very flexible and we are very open to change, okay? If you think you're not, your idea has integrity, you're not going to fleece or rip off your customers, and it is not clear, go ahead and do it. Okay, don't worry about us, we'll figure it out later. And that has been the approach of the regulators, at least in the last 18 to 24 months, that I have extensively spoken to them about new ideas, new concepts, etc. There has been a lot of writing on the wall in terms of NBFC aggregators, P2P consulting paper, crowdfunding paper, etc. But they are saying, let it be, right? We need to do our job and we'll do it well. But if you have an idea that's going to disrupt, don't worry too much about the regulation. As long as you're doing it, hand on heart, you're doing the right thing, it will happen. So that, at a big picture is where regulation is headed in India. And whatever you do, if you believe in your business, the regulation will come 5 years after that. Okay, so don't worry too much about it.
Okay, so which essentially means it's still a wild west out there?
Yes,
or can I sort of operate in a wild west environment?
Yes and no, as long as you're, shooting bullseye and not shooting down your customers, right? So,
as long as you're shooting the bad guys, you're okay.
as long, well, but that's a little difficult to sort of figure out first, right? Who are the good ones and who are the bad ones? So the question for you as a panel is, what are the trends? I mean, you sort of, beginning of the year, you see this whole predictions that come out, right? And some of them are true and some of them are false. FinTech, what big predictions do you think happening in this year at least? And one of the things I also want to look at is from the regulatory perspective. But one thing that's also very dear to my heart is financial inclusion. And that's a very key issue in India, right? Where financial services is underpenetrated and underserved. Some thoughts on that?
So, I'll take that in and hand over to Sunil. Many of you saw Vijay Shekhar Sharma, and everyone was very happy, giggling, smiling, great guy, top of the world, etc. How many of you believe here, hand in heart, raise your hands, that he'll be there on the dais with the same vigor and energy next year? Okay, how many of you believe that? Okay. And to give you some context, last year it was Ratan Tata and Kunal Bahal. Okay. So you get what I'm saying, right? Okay.
Wow,
so,
okay.
No, but I wanted to just check with you. You told me that these guys regulators are saying you please go ahead and do your job. Are you aware that these caps, this name kya tha? This phone service company, Vodafone, got slapped with a tax, kya bolte hain? Retrospective tax. Now these, you can finish your job and go away, and 15 years later they slap a notice on you.
Yeah, so to get into a bit of detail, okay, Vodafone was actually the buyer and not the seller. It was Hutchison that made a lot of money, okay, and Vodafone got slapped with $1 billion or so of penalty, okay, but that was, if you ask me, it was something that was wrong, okay, and which is why I said if you're doing your business right, you sell a company offshore which has value in India, I mean, it's bound to be taxed in India. There is a whole lot of, theory around why technically it's not right, etc. So the lesson, from Vodafone and the lesson from regulation is, if you can't do something directly, you should not do something indirectly. Okay, and we can debate about the technical aspects till the cows come home, but that's the one line. And believe you me, guys, we've seen a significant amount of change, both in the mindset of the tax authorities, which is difficult to believe but true, and of the regulators, more so the regulators, towards innovation, towards disruption, towards saying, oh, I've had conversations with RBI officers saying, I'm working for this company, that company. So, oh, I'm a customer. It's a great company. Why? How can we help them? So, the mindset has changed. And we are far beyond, the Vodafone nightmares in the tax and the regulatory space.
But even now, if you're asking somebody in a place like Oman, okay, I want $50 million for you to set up an aircraft factory here. He will ask me, are you allowed to interest बेच सकते हो क्या Oman?
So,
Yeah, we are in 2017.
Let me ask you, just hold on to your questions till we finish with the panel, because otherwise then the panel will not have enough time. And then after that, some of those questions, we can definitely take them offline. Please.
Sunil, over to you.
Okay, so I think, as Arjun said, I think it's very difficult to make predictions, and it's probably dangerous also to do that. But one of the things that I see happening is, see, one of the innovations in the financial services mainline industry, which has been happening over the last 5-10 years and which has worked well so far, has been the microfinance industry, which has actually, I think worked from a financial inclusion perspective, and a lot of people have been brought into the lending fold. However, as some of you may know, I think that engine is now starting to splutter for a lot of different reasons, political reasons, over-lending, etc., etc. And therefore, there will be, I think, a very quick innovation on the lending side is required to bridge the gap which will exist because of microfinance slowing down. So we're going to have a group of borrowers who have borrowed previously, but have borrowed more in the context of group lending, not individual borrowing. I think the same set of borrowers and a wider set around it can be reached out now through technology, given that, what Jitendra talked about earlier, the confluence of a lot of data, bandwidth being available, smartphones being available, and the past lending history, borrowing history, etc., etc. So I think that is one area where things will happen very quickly over the next 6 to 12 months. And SME, what Srirang was saying earlier, I think, again, SME borrowing has been difficult in this country for a lot of the reasons which Srirang spoke about. Again, with more and more transparency coming into the system thanks to GST and demonetization and all of that, I think that's another area which will get disrupted very, very quickly.
So I see two clear trends. Like in the morning, there was a session called on AI where they said that machines are not going to replace humans, but they're going to work with humans. In a similar manner, I think it's time that fintechs also start working with the banks, the way Sunil said. And like for example, OnDeck in the US has a complete platform which they run with JP Morgan. And the JP Morgan balance sheet actually funds the customers of OnDeck through the analysis of OnDeck, right? And they actually brand it Chase. Right, so I think this kind of a collaboration between the banks and the fintech companies is overdue now, and I think that will come, because till now it's always been that I'll bring this bank down because I'm a fintech, but I think that collaboration will start now. And on the second side, the financial inclusion side, where I think because of the more emphasis on digitization, even the SMEs would start paying tax, using numbers, etc. So there could be a wider net or wider gamut of lending, leasing that can happen to an SME. I mean, for example, we are building a lot of technology at the back end to capture various data points on SMEs, like the way other platforms capture on individuals. And I think with digitization, a lot of data points on the SMEs will get captured, because of which a digital lending to SMEs will start happening, and that trend will definitely emerge.
Rajesh, and
So, before I go on to the trend part of it, just to react to you, and I think tying up with what he was saying there, as an investor, I find it very difficult to invest in any company where the regulation is not clear, right? And I actually agree with you that when you talk to the regulators, they say, as long as what you're doing is not illegal or in the gray zone, just go ahead and do it. Because in our industry, it's always the first thought is go to the regulator, ask for an approval. And the regulator says, that's not my job. My job is to implement the guidelines and the regulations. As long as you think you're within the guidelines and regulations, go ahead and do it. So, it brings you to this whole trend thing. I'm not a believer in trend. So, and that comes from this long-term thought process. So if I'm an investor who's going to invest for the long run, and angel investing and VC investing is by definition long-term, because you're trying to build businesses from scratch, you cannot be banking on trends for the year. I mean, it just doesn't work. And I think more so from the entrepreneur's perspective, because if you're trying to catch on to a trend, I think you're completely missing the point. That's not the point. But that said, I'm not skipping the question, I will answer. So what I see happening in the ecosystem today, as far as fintech is concerned, is I think it's a one-way direction. And as other panelists have alluded to, there are opportunities and opportunities and opportunities. For a simple reason that we live in a country where there's so much friction, right from the time you get out of your house to the time you come back from wherever you're going, every interaction with every body that you interact with is a friction, right? There's so many problems to be solved. Banking itself, and Sunil just said that you don't go to a bank anymore, right? The private sector, public sector, you still have to go to sign if you want to do a KYC, by the way. So I think that's just one step, and this is therefore I say it's a unidirectional thing. Technology is going to play an increasingly important role in how finance is served to customers. The finance companies and this whole BFSI space, players larger and smaller will have to go to the customer and reach out to the customer. Customer will definitely become king, and you see that happening all over the place. So I think as long as you are long-term in your approach and you figure out where your capabilities are and where you can make a difference, either as an investor or as an entrepreneur, you just stick to it and just execute. If you execute well, you don't need to watch out for who's here, Ratan Tata or whoever is sitting here. It doesn't matter.
Thanks, Rajesh.
So we need your views as well about the trends.
Yeah. What are the trends?
So, I tend to believe that, that the change that's going to happen in financial services is fairly rapid. But I think the opportunity is also immense, but which also means that from an entrepreneurial perspective, you'll have to essentially be extremely focused and really precise in wanting to address a particular segment or a particular problem. Because if you really look, it's everywhere, right? Look, insurance, you have opportunities. You have opportunities in regulation, reg tech, right? You have opportunities in financial, in investments. You have opportunities in financial literacy. You have operations in pension plans. You have opportunities in chit funds. You have opportunities for banking to the underserved. You have, banking to the millennials. You even have opportunities in accounting, which is all now completely becoming automated, right? So from that perspective, I think there is going to be a lot of that happening. And in my mind, in my perspective, I think things like blockchain and all of that will become completely mainstream. They'll actually get to the point where it'll just go beyond being something exotic and used by Bitcoin at this point, and it'll become a lot more. And I think AI will start playing a lot more, a much more stronger role in financial services going forward. I think if you look at our demographics and the people sitting here, I think a lot of those decisions and the change that's going to happen is probably going to be driven more by our children and the millennials rather than us. And I think they're the ones who will probably make a lot of the change happen.
Yeah. So very quickly, two trends or two things that I think, and I agree with Rajesh, trends are irrelevant. So one is you will be judged this year not by how much money you've raised, but how much money you make. Right, which is very, very important in the DNA of financial services, right? Gone will be those days of headlines like Jiten mentioned, we've raised 100 million, 200 million or whatever at a X billion valuation. You'll really be judged on how much money you're making, okay? That's one. Second, financial inclusion, very cliched word, used by everyone across, the whole paradigm of financial services. Actually, and to Sunil's point of microfinance, the politicians or whoever couldn't believe that microfinance companies are making money out of poor people, right? But it's a phenomenal business. If you break India into three parts, okay, India 1, which is where all of us are, men in suits, okay, India 3, which is bottom of pyramid, there's a huge amount of potential in India 2, which is neither there nor here, okay? And to get financial services there and make a lot of money, it is easy. It is there. It is as obvious as the financial crisis was to some people, and that is going to be the changing flavor, of this year, where people are going to really focus on India too and make their money.
Okay. Thank you. In the interest of time, I want to make this interactive and open this up for questions and discussions. So please, if you have any questions or thoughts for panelists, ideas, please share.
I read is probably 75% of the people do not have a credit history right now. Yeah. And really, much of them could be credit worthy in future. Yeah. And Mr. Tambe said that, I hope I'm getting the name right.
Yeah.
That essentially in India we'll have to look at offline model. And that just completely makes sense. So any thoughts or experiences in terms of what is the offline model likely to work like? Is it really needed? Somewhere around there, because it's true that you cannot do analytics on these guys and forget about it. So how are we going to address that space, and what's the offline model likely to be?
I think the microfinance sector, they had something called as BC, business correspondence. It will be a variant of that, because there they used to go to individual households, and now they go with the tablets and say, okay, I take your photo, this is your thumbnail, etc., etc. And they started with pen and paper, and now they have tablets, right? All the BCs have the tablets, etc. The offline model will be something which is more touch and feel, where you will say, okay, whether the person has an office, it could be a one-day due diligence visit. He claims to have this kind of inventory. Is the inventory still there, etc.? Or is just the false VAT returns which are uploaded for for loan sanction of within 24 hours, right? So I think these kind of a basic touch and feel will always remain. People ask me that you're from a very old school of thought. I said, no, I'm not, because the e-com guys are now setting up physical shops, right? So because they've finally realized that the Indian population needs to touch the toys that First Cry is selling, and so you have firstcry.com on a physical model. right? So I think the basic little touch and feel where you kind of do a basic due diligence for it will remain. That is what I mean by offline. It may not be what the big fours go in for a 15-day due diligence when a private equity is investing. I'm not saying of that kind of a thing. I'm saying that is your VAT returns really genuine what you have uploaded on for a 24-hour loan sanction? You know.
I think if I just want to add to that, I think a couple of things there. One is that credit history for more and more people is evolving now. Microfinance has brought a lot of people in there. Second, the fact is that with India Stack happening and Jan Dhan bank account happening, DBT happening, etc., etc., and Geo happening, very, very good point. So confluence of all of that, there are many more data points which are going to be available in order to do more analytics. It doesn't take away the need to do a direct visit and offline delivery, etc., etc. Some of that will stay and will be a hybrid model. But those models are also becoming more and more what I would call B2B2C. In other words, it's far easier, let's say, to deal with farmers who are supplying to, let's say, a sugar mill in Sholapur, that entire hinterland. Because you've got somebody who's a payer, he's going to supply him sugar after a while. It's far easier for me to deal with that homogeneous mass of those farmers in one lot rather than looking at many heterogeneous families within the same group. So those are some of the models, I think, which have already been tested, and with more data being available, geo capability, data, etc., it'll become easier to deliver to the same person. Right now, delivering a 50,000 loan is very expensive for the reasons we talked about. But with digitization, with costs coming down, it'll become more economical to do it, and that's what's going to expand the market.
Last question.
And to add to that, Bank of Baroda, you go to any branch, okay, SBI, you go to any branch, it will have the same look and feel, yardage, etc. Based on, research and analysis that we've done, we can actually over-optimize the space, okay, and have the same look and feel service in an SBI branch at half or quarter of the space with the same amount of people, right, and a better look and feel. So forget the online, even offline, if I have X thousand branches, I can multiply it by 4 and I can just get the revenue per unit so high, it will be profitable immediately. So that it will be a variant of all the 3 pieces that we said. Yeah.
Great answer.
Can you speak
I
up?
would like to make a point that still the India 2, part 2 that you said, they are not having easy access to credit. They don't have credit cards, they don't have access to small ticket size credits. And I think there's a huge opportunity out there which banks and FinTech and whatever means, they need that access. It may be short-term credits, personal loans of very small ticket sizes, which may be for you 3 months to 6 months. That access is not there to the people in the India 2 part. The bottom of the pyramid and the other, the B2B is being catered to, but at the retail level, there's a huge gap where I feel that some systems need to be created for them to have access to this connectivity.
I think that's a very valid point. So there is, like in your terminology, the India 2, this middle section, which a majority of that or a significant portion of that may be credit worthy and deserves to have credit, but nobody has had the bandwidth or the resources deployed to verify that the credit worthiness of that population. And I think taking off from what Sunil said earlier, with this new focus that the government has now of digitizing India and getting data on you, me, and tier 2, tier 3 cities and the villages, etc., I think you don't need, I'm going to differ a little bit with what these guys said, that, the offline is important. I'm a believer that there is one India where offline is very, very important, but the significant part of India which is data rich in terms of you can capture many, many data points for that individual, with apps sitting on your phone, etc., we can get into all of that. You don't need to ever see that guy for at least a significant part of the business that he wants to do with the financial system. Of course, if you want to borrow a few crores here and there, depending on who's lending you, etc., there may be requirement of that offline model. But I think I see the importance of that offline model going away. And as that happens, and it's not happening immediately, but as that happens, this tier 2 retail shopkeeper in your city, in your town, will have access to credit. Will have access to, he may not need a credit card. We may not have credit cards in the future, but he will have access to credit. He will have access to banking, to insurance, to a host of financial services that today completely passes them by. And that's the whole story. That's the whole excitement about this FinTech revolution that's happening.
No, I actually fully agree with Rajesh on that. The issue why the India 2 has not been able to get that is not because people don't want to lend. It's because in the traditional model, when you had bank branches or NBFC branches lending, it was not cost effective to do a loan below a certain size. And that size, quite honestly, is more like a 20, 30 lakhs. It's not profitable or viable for a bank to do it. Therefore, the only way to do it, and the beauty about financial services is that it's anyway a digital service. So when you're doing a digital service, why not deliver it digitally? Why not analyze it delivery and collect it digitally? Moment you do that, your costs drop dramatically and come down to unit economics, come down to a point where you can make a loan even of 200 rupees or 300 rupees at a profitable sort of level. As Jitin was alluding to in his point, a pay later kind of a paradigm of 200 rupees is doable in the digital world. So I think the complete paradigm of lending will actually change once we are able to deliver money digitally, completely digitally, and are also able to sort of analyze the credit, which means we need enough data to be within the sort of realm and system to be able to do that. And not only financial data, but a lot of other sort of elements which go together with that. And I think that might actually change much faster than all of us think at this point in time. 2 years from today, we may be saying that that was why didn't it happen 10 years earlier.
But with the implementation of GST, will it not change the way people will be financing? Because in GST, what is happening, each and every invoice needs to be uploaded onto the GST network. Naturally, will it not, like you were saying that there is a lot of offline work to be done for financing. So will it not change the way the financing will be done for these businesses?
No, I mean, there is, and that's where there's actually, a couple of innovative models that have come, right? As investors, we have seen these new platforms that are sort of being developed, which will essentially look at invoice, bill discounting and invoice discounting, right? What was called as factoring in the West. Those working capital loans, and a lot of those will actually become a lot more possible, and I think smaller ticket sizes will also become possible, partially because of the fact that the whole GST rollout is happening.
I think in addition to GST, the other thing that is not talked about as much when we talk of FinTech was this whole demonetization thing. Forget about the immediate impacts and all that. Just imagine all these transactions are now going through the official channel, right? You cannot buy real estate now without having you mapped completely. You now cannot buy gold beyond a certain amount without you being mapped completely, right? And whether you're in a tier 2, tier 3, it doesn't matter, right? If you can't use cash for most of these transactions, what are you doing? You're generating data points, right? Which helps me as a business to map you out completely. I know your history, so I don't, like Jitin was saying, as you are applying for the loan online on your phone, they've already figured out whether they should lend to you or not in a matter of a few seconds. So as you create your digital data print, your footprints in the digital world, it becomes easier to interact with the financial system in the country. And that's financial inclusion, by the way, like you were saying.
You're right. And what basically just putting this together, the more digital data we have, the thresholds to lend digitally will start going up, right? So a couple of years ago, online marketplaces used to do up to 5 lakhs. Now they do up to 20 lakhs. Maybe they'll go to 5. Why? Because more data is available, right? So as the data points keep going up, the thresholds to lend digitally without any physical due diligence or even observation will start keep going up, right? Right. For example, I was talking to one of the leasing companies in the Netherlands called DLL, which is a 100% subsidiary of Rabobank. And a guy walks into an equipment supplier. He enters his social security number, and a lease up to 250,000 euros gets sanctioned on the same day, just by entering a social security number, right? Why? Because every data of his is connected to that one number of his. And in Netherlands, you can get a lease for an equipment up to $250,000 in a day, right? So that is a stage where you can actually reach when the data points go up.
Last question.
How do you see the acceptance of cryptocurrency like Bitcoins by the regulatory authorities coming up in the near future? And will it disrupt some of the...
Okay, billion Bitcoin question. Okay, billion Bitcoin question. Okay, so question one, right? What is a Bitcoin, or is it a currency or a commodity? Okay, that's the question globally regulators are struggling with, right? Is it a currency or a means of exchange, or is it a commodity itself, which needs to be exchanged? Okay, if we solve that part of the problem, as we speak, like every other regulator, the RBI has issued a press release a couple of years ago and reinstated it a couple of weeks ago, saying we do not believe in Bitcoin or any other cryptocurrency right now, okay, and we are working, analyzing, etc., etc. The truth of the matter is, okay, blockchain is going to be real, okay. Whether Bitcoin will remain 2 years from now or not, a distributed ledger will surely hit us and hit you much, much sooner than you think. Okay, and when blockchain becomes real, whether Ethereum, I mean, you saw what happened to them, or whether Bitcoin or whether some other currency, it will be a means of exchange or it will be a commodity, but blockchain is here for real, and it will hit you much sooner than you think.
Thank you. Sorry, we are out of time, and we'll have to sort of end the discussion. But some of us will be here, and we'll be happy to connect with you offline and take any questions that you may have later on as well. Thank you. Sure. Thank you.
Thank you, Jarman.
On behalf of TAI, I would like Mr. Vinod to give a few souvenirs as a gratitude. So this is for you.
All right, thank you.
Thank you.